Welcome everyone here to our Solo 401k and Self-Directed IRA live Q&A session. My name is Natalie with Sense Financial, and we are a boutique financial firm specializing in self-directed retirement accounts with checkbook control. I am here with Dmitriy today. He'll be answering all of the questions. Dmitriy Fomichenko is the founder and president of Sense Financial Services. He began his career in financial planning and real estate investing in 2000. He owns multiple investment properties in various states and is a licensed California real estate broker. Dmitriy holds designation of Certified IRA Services Professional from the American Bankers Association. And over the years, he's taught hundreds of investment and financial planning seminars and has mentored thousands of investors. Welcome, Dmitriy. Thank you for taking the time today to answer the questions during the session.
Thanks, Natalie. It's great to be with you, and always looking forward to the questions. So today's my exception. Let's dive in.
Sounds good. Okay, first question here is from Philip. He's asking, what are the investment options for Solo 401k and self-directed IRA?
Great question, Philip. As far as the investment options, they're virtually unlimited. So it's impossible for me to go over all the options. I can name some of the most common investment options. Real estate probably be at the top. A lot of our clients self-direct into real estate. You can buy rental property. You can invest in commercial real estate as limited partner in syndications. You can partner with someone and buy a piece of property together using your IRA or 401k as a partner. You can also be the lender for real estate that is purchased, but in addition to that, people invest in cryptocurrency. They invest in limited partnerships, private businesses. The list goes on and on and on. And actually, IRS doesn't give you a list of allowed investments. IRS gives you a list of prohibited transactions or investments that are disallowed. And that is collectibles and life insurance contracts and stock of a S corporation, because you have to be a physical person to invest in a S corp. Other than that, you can invest in virtually anything. And speaking of the prohibited transaction, I should also mention that IRS disallows any transactions with disqualified person, which is yourself and your immediate family members. So, for example, if you own a property, it will not be possible for your 401k to acquire that property from you. That will be a disqualified transaction, prohibited transaction. Other than that, the sky is the limit.
Next question here is from Joseph. What brokerage house is easiest to use to invest in stocks and bonds with my Solo 401k?
Another great question, Joseph. As I mentioned, you can invest in virtually unlimited number of alternative investments, but that doesn't mean that you don't have access to the traditional investments, mutual funds and stocks. You absolutely can invest in those, and all you need to do is just open a brokerage account. Which one is the easiest? I can't answer that, because for some people, one might be the easier than the other. Some people will prefer one over another. We do on our client portal provide you instructions to about a dozen of options for brokerages. Just log into the client portal, go to the top section, click on the banking, and then you will see the instructions for brokerages, and that includes Fidelity, Schwab, I'm blanking, Vanguard, and a few others. But you have to select one. We can't recommend one over another. That's usually a personal preference, but any brokerage will work. You just have to establish account in the name of the 401k trust using its tax ID number and you can link it with your checking account for the solo 401k, transfer the funds and invest. It's pretty simple process.
A question from Damien. What service do I get for your annual fee, and what will happen if I don't retain your services?
Damien is an IRA client, and so every IRA requires a custodian. So you must have a custodian to have an IRA. And the custodian that we work with is Solar National Bank. They are the custodian and also our banking partner. They provide bank accounts for our clients. And as far as the IRA, the fee that you pay pays the IRA custodian fee. And because of our relationship with Solera, you actually get a 50% discount on the normal fee. So if you're decide to disengage our services, you're going to lose that discount and you're going to have to pay the full fee of $500 to Solera directly. So you'd be working directly with them because your IRA account is with them. So that's what the IRA fee pays for. And also because you're doing it through us, you have access to our team, and we do offer unlimited support. So you can contact us for a consultation and any questions you might have.
A question from Joe. With Solo 401k, am I allowed to take a one-time distribution for a purchase for personal use? If allowed, would it be taxable transaction at income rate rather than capital gains rate?
Joe, if you're taking a distribution from an IRA, it doesn't matter what you're going to use the funds for. You can purchase something, you can gift it to someone, you can donate the money, you can just use it personally. If you're taking a distribution from your Solo 401k, yes, that is a taxable event. And if you're taking a premature distribution, you also will be penalized for that, so keep that in mind. And so, yes, the distribution will be subject to ordinary income tax rate. So you have to confirm with your CPA what that will be for you. But yeah, there is no such thing as the capital gain tax in the 401k, because again, it's a retirement account, and distribution from a retirement account is subject to ordinary income tax, and you should confirm the details with your CPA and what the exact implications will be in your case.
Just questions from Brian. I already set up my Solo 401k but never funded it. Do the funds need to come directly from my business account, or can they come from a personal source?
So if you're looking to make a contribution to a Solo 401k, contributions can be made only from your self-employed compensation. So yes, it has to be, you have to have a profit to justify the contribution. The mechanics as far as contribution will vary depending on the type of business that adopts the 401k. So if you are incorporated or LLC taxed as an S Corp, your elected deferral must be done through the payroll. So you have to pay a payroll and then have the 401k contributions be taken out of the payroll. That's your elected deferrals. The profit sharing contributions are made by the corporation, so that's not run through the payroll. If you're a single member LLC or sole proprietor, then you just simply contribute directly without running a payroll. So you could potentially use contribute money from a personal account, but you have to have the profit to justify the contribution. And we recommend contributing from a business account. If you have a business, run it like a business. So you should have a business account for all of your expenses, and all of your income and contributions will come from that account as well.
This next question is from Shelley. Can you please discuss when I would need to file Form 5500 EZ and what are the consequences if I miss the deadline?
The requirement for filing annual Form 5500 EZ is that your plan needs to have $250,000 in total plan assets. Remember, this is a total plan asset. So if you, just to give you an example, I think a number of people misunderstand this, that let's say if you start with $50,000 in your solo 401k, and then you use that to acquire $300,000 property, you put 50 down and you get a loan for 250. Well, now your total plan asset is $300,000 because there is leverage, so the net might be less, but the total is over. You will be required to file this form. The other requirement is if the plan is terminated. If the plan is terminated and the year it was terminated, you're required to file final Form 5500 EZ regardless of the total plan assets. The consequences are pretty severe. I think it's $250 a day, so it's up to $150,000. Just I think a couple of days ago, I received an email from a client who got a letter from the IRS with like $50,000 or $60,000 penalty. So it's no joke. Make sure that you file the inform you of the deadline way before the actual deadline is. We do help you complete the form. We can review it for you. It's pretty straightforward process. So be sure to do that if you are in fact required.
Next question here is from Gordon. How can I switch from S Corp to sole proprietorship for my solo 401k?
This is common and it does happen. So if you change the business structure, let's say you started with the S Corp and then you decide to wind down your S Corp and switch to sole proprietorship, it can be done. Your plan needs to be amended if that is the case. So we need to change the sponsor of the plan. Just contact our team and we will help you. There is no extra cost for this. It's included in our services. Just reach out to our office. We'll give you a form to complete and then we can process that amendment for your solo 401k.
Next question is from Quang. What is the maximum contributions for solo 401k for 2024? Is it too late to make a contribution?
The contribution are spelled out on our website. You can go to the contribution limits and there are actually two contribution types that you can make. That's elected deferral and profit sharing contribution. And we also recommend that you use the contributions calculator. This is a great resource. All you need to do is just type in your numbers, your compensation for the year, your age and the type of the business, and the calculator will give you the number, how much you can contribute. As far as is it too late to contribute for 2024? Well, also I'd like to reference a page on the website, and that's contribution deadline. And that depends on the type of the business that sponsors the 401k and the type of contribution that you make. So, for example, if you're incorporated and elected deferral needs to be done through salary. Well, you already done salary for last year, that will be too late. Profit sharing contribution can be made up until tax filing deadline plus extension. So again, in the case of an S Corp, if you file for an extension, you potentially have until September 15th. That's when the corporate deadline with extension to make that contribution. And if you're a sole proprietor, you potentially have until October 15th to make that contribution. And that's actually true for a sole proprietor for both for profit sharing and elective deferral. Now remember, the actual contribution needs to be made before you file the tax. So if you're file for an extension and you actually need to make a contribution and then file the tax. But you won't be able to make a contribution after you file your tax return.
Okay, a question here from Mark. I'm now 50 and get catch-up contributions. Are these considered elective deferral contributions?
Yes, Mark. The catch-up contributions are tied to the elective deferral contribution. So for this year, if you are 50 or older, then you can contribute 23.5 plus additional 7,500 as elective deferral contribution. So it is tied to the elective deferral, yes.
Next question is from Leo. What are the rules for converting solo 401k to Roth?
Your solo 401k plan and every plan that we established for our clients does come with the Roth provision, and the Roth provision allows you to make Roth contributions, or you can convert your pre-tax dollars into Roth. Well, first of all, you need to decide that you want to do that. Obviously, Roth conversion is a taxable event, so a conversation with your CPA should take place so that you're aware of the tax consequences. And then you need to create a designated Roth account for your Roth dollars, because you can't keep them together. You need to separate your Roth dollars. If you don't already have a Roth account, create one, just a new account in the name of your 401k. You're going to go through the same process, and you simply need to label that as a Roth. And then if you convert in a cash, then you complete the Roth conversion form. You can access that form on the client portal under maintenance miscellaneous forms. We do also have a couple of articles on the Roth conversion and the knowledge base. Review those, and then you complete the form and you move the funds from the pre-tax account to the Roth account, and you're done. Then at the end of December or in the first week of January, you need to reach out to us so that we can generate a 1099-R for you, because again, it's a taxable event, and we have the ability to generate this tax form on behalf of your solo 401k plan. Even better way to do that, I don't have the time to expand on that much, but just you'll mention that you can actually convert in kind, so you can convert an asset. And sometimes, depending on what assets you're investing, you can value them at a discount. So, for example, if you're doing a private lending and your 401k owns a note, that note can be valued at a discount, potentially between 40 to 70% discount. If the note is current, maybe 30, 35%. If the note is delinquent, I've personally done that last year, and I think I've gotten like close to 70% discount. I think 65 or something like that. So this is a great strategy to minimize your tax liability. So keep that in mind. You can also do Roth conversion in kind.
Okay, a question here from Judy. How do I take a distribution from my solo 401k?
Judy, thank you for your question. Similarly to Roth conversion, distribution can be made just by taking cash, or potentially in kind. You can actually pull the asset out of the 401k. You can retitle it to your name. It might make sense in some cases, so you potentially can do that. So if you do wish to take a distribution, we do provide a distribution form on the client portal, so So again, to go to the client portal, go to the maintenance tab, and then click on the miscellaneous forms. You will find distribution form there. You complete that form, and then you can simply write the check to yourself from the 401k bank account, deposit that check into your personal account, and you're done. Distribution process. Again, the same as with the ROT conversion, when you take in a distribution that is a taxable event, it's also a reportable event, and you're required to file Form 1099-R to yourself from the 401k, and we can assist you with that. You just need to contact us at the end of December or first week of January, and we can help you with this.
Question from AJ. Can I pay a college fee for my daughter using Solo 401k?
AJ, you cannot use your Solo 401k to pay for college. Solo 401k is a retirement account. You can use the 401k funds to invest. Paying for college, yeah, in a way, you're investing in your daughter. I understand that, but that's not qualified investment. So you can only make actual investments. You can purchase assets with your Solo 401k. If this is the only way that you can that you have the source of funds, the only source of funds, then potentially you can take a distribution from your 401k and then use the distribution funds however you wish, including paying for college. So that's the only way that it might work.
Next questions from Farah. Are there restrictions on loans taken from the Solo 401k account?
Another good question. Solo 401k comes with the loan feature. So there is a participant loan that is you as a participant allowed to take from your 401k. The loan is limited to $50,000, so 50% of the balance, whichever is less. And you can pull one out at any time. You can actually have multiple loans. Our plan documents allow up to 3 loans that are subject to the same limit. But once you've taken the loan out, it's your money. You can do with it whatever you want. You're just responsible for paying it back. As a reminder, payments must be made monthly or quarterly and using an amortized schedule. And if you miss the payment, then you'll be in default, and that will result in taxable event. So be sure to stick with the schedule. But there is no restriction on how the loans can be used.
Next question is from Terry. Can you discuss the different strategies for people still earning W-2 versus people over 59 and a half?
Terry, I wish I could answer your question, but your question is really unclear. Strategies for what? Whether you're employed or over 60, I can guess what the question is. I mean, if you have a retirement account, you can invest in alternative assets regardless what your age is. Your strategy might be different as far as the distribution, but I need more context in order to give you more meaningful answers. So Terry, if you're there, go ahead and type or expand on your question in the Q&A, and we can get that to that at the end.
Okay, this question is from Carrie. How does RMD work for real estate in IRA LLC non-Roth?
Another great question, Carrie. So if you have an IRA LLC with real estate and you come to the RMD age, then RMD stands for required minimum distributions, and you are required to take certain amount depending on your age and how much is in your IRA. You're required to take distribution. Now, keep in mind that RMD for IRAs work across the board. So you may have multiple IRAs, and you can just take distribution from one IRA to satisfy the RMD. for all, because it's kind of lumped together. That is not the case with the 401k. So if you do have a 401k, you have to calculate and take RMD from that 401k specifically. But back to your question, you have an IRA LLC. Look, for all of you who listen, the first thing you need to do is you need to plan for that ahead of time. Don't just wait until you turn RMD age. Plan for it ahead of time. Ideally, you do want to have enough assets in your checkbook IRA or Solo 401k for that matter that produce enough passive income that you can just take the income out without touching the assets, and that's going to provide you during your retirement. So that will be ideal. You got to have some either some cash or cash flow to satisfy the RMD. But if you happen to come to the situation where you don't have any cash available and no cash flow coming in, and you're forced to take RMD, well, you can take the distribution in kind, as I explained a few questions back. You can take in-kind distribution. You can pull the entire asset out, or perhaps portion of the asset, 10, 25% of that asset you can distribute to yourself. And doing so, you will satisfy the RMD.
Okay, a question here from Tom. How do I value real estate in my Solo 401k plan?
Good question. The valuation of the real estate and the Solo 401k depends on what you're valuing it for. What's the event? So if you're taking a distribution in kind, as an example, in the previous question, if you're taking in-kind distribution from your Solo 401k, you need accurate value. You need a third-party valuation, aka appraisal. So you have to order an appraisal, or if you're doing perhaps rough conversion on the property, you do need an appraisal for that. But if you value in real estate for reporting purposes only, for Form 5500 easy, you don't need precise value. You can just use the value that you can pull from Zillow, and that will suffice, because there is no taxable event. You just need the estimate of value on that, so that will work.
Okay, those were all of the pre-submitted questions. We do have one question that was submitted here in our Q&A section. For those of you here, if there are additional questions, use this time to type those in. But this question is from Scott. He says, I do most of my real estate investing in my Solo 401k, but very little in my S Corp that sponsors my Solo 401k. Can my Solo 401k pay my S Corp to manage my rental properties held in my Solo 401k?
The short answer is no, and I can expand on that and explain why no. So your S Corp is extension of you. You're the owner of the S Corp. And your S Corp technically is a disqualified person to your Solo 401k. And as you know, IRS rules prohibit any interaction between qualified plan and disqualified person. So you're not allowed to provide services. Your S Corp will not be allowed to provide any kind of services to your Solo 401k plan. That will be a violation. And second violation will be getting compensated for that. So that will not be allowed too. Now, you as the plan administrator and trustee, you can provide basic administrative and management duties, because you have a fiduciary responsibility to manage your 401k. So you make investment decisions, you can do some kind of administrative work, paperwork, and so forth. But absolutely, you may not get compensated for any work that and your S corp is not allowed to do any work for the 401k either.
Okay, another question from Joseph. He is asking, can I request a distribution from a qualified union annuity and deposit it into my solo 401k?
Before I jump into the answer, please type your questions, because this is our last question for today. So if you think of anything else, if you want further clarification, perhaps on the previous questions, this is your opportunity to type your questions. And back to Joseph. So you have qualified union annuity. Now, if it's a qualified, that means it's inside of a qualified plan. So it might be an annuity into some type of retirement account, either an IRA or perhaps 403B. So I'm guessing, again, without seeing the details of this plan, the key word here is qualified. If it's qualified, then it can be rolled over. So you will need to liquidate the annuity, but you need to double check with them if they will allow you rollover, direct rollover from that vehicle, whatever that is, whether it's an IRA or 403B, into a solo 401k. A solo 401k will accept rollover from any other retirement plans except Roth IRA. So Roth IRA is the only exception. Any other accounts allowed to be rolled over into solo 401k. But you need to investigate a little bit further with the provider, make sure that it is in fact qualified, meaning that it is inside of a retirement account. And if they will allow you to move that into 401k. Don't need to mention them, it's a solo 401k or self-directed solo 401k, because it may confuse them. Simply tell them you wish to move that into a 401k. Can I do that, and what is the process, and then they will guide you.
Okay, looks like there aren't any more questions. Should we wrap up the session, or maybe wait another minute to see if another question comes through?
Well, yeah, I don't see any other questions, so I guess this will wrap up our session for today. Thank you for joining, to all of you, and we will see you next time. Not any webinars that we have coming up that you can announce? Last minute.
Our next Q&A session is Monday, May 5th. So we do hope that some of you can join us, ask any additional questions that you may have. But yes, that's Monday, May 5th.
Awesome. Thanks, and thank you all for joining.
Thank you, everyone. Bye.